Hi everyone, in this video we'll be focusing on appreciation and depreciation. So first we need to understand what is appreciation and depreciation. So when we invest money in the bank over time, as you would have learned when we were doing the simple interest and so on. So when we invest money in the bank over time, we gain interest, thus having more money in the bank than when we first invested. In this sense, we see that the money invested appreciates. Now, when we think about depreciation, so sometimes when we purchase an item, for example, a car, the value of it decreases over time. This is called depreciation. So just to use a real life situation, let's say you bought a car last year, right? So you bought a car in 2019, and 10 years from now, the value of that car, however much you paid for that car last year, 10 years from now, that value of that car is going to go down. It's going to depreciate, right? The value is going to decrease. And that's what depreciation basically is. So the examples I will be focusing on, or this example here, is more on the depreciation, right? So let's look at this example here. Soraya bought a new car for $120,000. Its value depreciates at a rate of 10% per annum. Calculate the value of the car after A, 1 year, B, 2 years. So the value of the car depreciates at a rate of 10% per annum. Remember, per annum means per year, right? So the value of the car decreases 10% for each year. So now they want to know the value of the car for part A after 1 year. So for the first year, right, let's find 10% of that 120,000, right? Again, you could just cancel your zeros. A zero will cancel here, one here, one here, and one here. We're going to remain with $12,000. So after the value, so the value of the car after 1 year would be the $120,000, take away that 12,000. So after 1 year, the value of the car is $108,000. Now we want to know the value after 2 years. So now we need to find the value, how much it depreciates now during that second year, right? So now we're going to find 10% of the new value, which is 108,000 that we found from part A. So 10% of that, again, same procedure, cancel the zeros. Or you can just use a calculator if you want to, not a problem. And you will get it depreciates by 10,800 for the second year. So the value of the car after the 2 years will be 108,000, take away $10,800. And so after 2 years, the value of the car is $97,200, right? Very pretty simple. So in these questions, you need to put yourself in these situations for all these consumer arithmetic questions. Really put yourself in the position of the person who's buying, selling, investing, any of those things, to really understand what is going on. So John bought a car for $65,000. If the value of the car depreciates by 8% each year, how much will the car be worth at the end of 2 years? Similar to the example we just did. So if you want, you can pause the video, try the question, and then when you finish, try the question, play so you can see the answer. All right, so he bought the car for $65,000. So depreciate of 8% each year. So how much will be worth at the end of 2 years? So let's look at the first year. So after the first year, let's find 8% of that $65,000. And that would be 8 over 100 times $65,000. Now, again, as I said, you could use your calculator. You could cross out your zeros. 1 0 here, 1 0 here, 1 0 here, 1 0 here. So we will get 8 multiplied by 650, and our answer will be $5,200, right? So now, after the first year, the value would be $65,000, take away $5,200. So let's take away that, 65,000, take away $5,200, and we will get $59,800. Now, it's going to depreciate again after the second year, right? Remember, it's 8% each year. So now let's do the same procedure now for the second year. So after second year, it will be 8,000 of that new value, which is $59,800, and that will be 8 over 100 times 59,800 all over 1. Cancel your zeros, right? So now in this case, we are going to get 8 times $598, and it's going to depreciate by $4,784. So now the value at the end of 2 years would be that 59,800 take away the $4,784. So now let's just subtract that, 59,800 take away $4,784, and we will get $5,016. Now again, he bought the car for $65,000 and it depreciates by 8% each year. That means the value goes down by 8% each year. Right? So you have to find 8% of the original cost, 65,000. Then that's how we get the 5,200. Let's subtract that from that 65,000. And that'll be the new value after the first year. And then same procedure after the second year. Now we're looking at this nice question here. At the end of any year, a car is worth 5% less than what it was worth at the beginning of the year. If a car was worth $9,500 in if the car was worth $9,500 in December 2016, then its value in January 2016 was, now, let's read over again. At the end of any year, a car is worth 5% less than what it was worth at the beginning. So they gave us the value of the car in December 2016. That is the end of the year. They want to know the value of the car that it was in January 2016. Meaning we want to know how much the car was worth at the beginning of 2016. So therefore we know that if it's worth 9,500 in December, that means in January it would have worth more, right? It would have been worth more. So right away from my options here, we don't know that. We already know that A is not an option, right? Now, well, not that A is not an option. I shouldn't say that. That's my bad. Not that A is not an option. I was looking, if A was less than $9,500, then it wouldn't have been an option. Whatever value is supposed to be more than 9,500, right? So A is an option. So I correct myself. So now it is worth 5% less than what it was worth at the beginning of the year. So that means in January 2016, the car is worth 100%. And December 2016 is worth 5% less. So therefore, that is worth 95%. So therefore, we could look at it this way. 95% is equal to that $9,500. Find for 1%, which would be 9,500 divided by 95. You could cancel, and we would get 100. We want to find for 100%, how much it was worth in January. So that'll be 100 times 100, and we will get 10,000. And that's my answer, right? Now, there are other ways you could do it as well. You could use the options. You have the answers you were given to figure out what was the answer. So let's just choose B, right? Let me say, okay, you thought B was the answer right away. Then, if in January it was worth 10% less, so 5% of 10,000 is 5 over 100 times 10,000. Cancel the 2 zeros. So that means at the end of that year, 2016, it will be $500 less. So that means December, at the end of the year, would be the $10,000. Take away that $500. So in December 2016, that's the value of the can, that's the value they actually give us, right? So then this option, the second option I showed here on the right hand side here, that's like a reverse method, using the answers, if it's multiple choice, using the answers they give you to kind of work backwards to get your answer, right? So again, you could do it whichever way you are comfortable with. But this topic is generally easy. Depreciation means that the value decreases every year, right? Any questions? You feel free to ask.